Gold is falling like the floor disappeared. But this collapse did not begin today. The warning appeared near the peak months ago. Since then, gold has built a sequence of failed recoveries, lower highs, and broken support. Now the daily, 4-hour, and 1-hour ICC signals are aligned bearish. The question is no longer whether gold is under pressure. The question is whether this is still a major correction inside a longer-term bull market or the beginning of something much larger. This video is for educational and informational purposes only. It is not financial advice or a recommendation to buy, sell, or hold any asset. Futures, leveraged products, and precious metals trading involve substantial risk. Always use your own analysis and risk management. The current sell-off looks sudden because the latest candles are nearly vertical. Micro gold futures are trading near 4,067 after reaching approximately 5,627 near the late January peak. Spot gold shows the same story, falling from approximately 5,602 toward 4,060. That is a peak-to-current decline of roughly 27%. But the peak was only the first warning. Gold failed to sustain that high, sold off sharply, and then recovered without reclaiming the peak. That recovery formed a lower high. Through April and May, price continued losing ground while the daily trend weakened. The latest acceleration began around June 5th. The June 9th and 10th decline is the fastest part of the move, not the beginning of it. The monthly chart explains why this move needs context. Monthly structure still shows bullish authority. The long-term advance has not been completely erased, and price remains above the broader monthly trend foundation. But the same monthly dashboard shows bearish momentum, bearish multi-timeframe pressure, and a deep pullback. That creates a conflict. The macro structure is still bullish, but the active move is strongly bearish. The weekly chart moves one step closer to confirming the damage. Weekly structure is transitioning. New long authorization is blocked, momentum is weak, and price has broken away from the recent consolidation. This is not yet a clean declaration that the entire long-term gold bull market is over. It is confirmation that blindly buying the dip is no longer justified. The daily chart is where the correction becomes an active bearish structure. Daily ICC structure shows bearish authority. Short authorization is active. The short trail stop is active. Price has broken major support and continues closing beneath the declining trend structure. The important point is sequence. The daily chart began weakening long before the latest vertical candles appeared. The failed recovery, repeated lower highs, and loss of support created the conditions for the current acceleration. The breakdown was already developing. The latest drop simply made it impossible to ignore. The 4-hour chart shows the move gaining force. Structure is bearish, the VRM trend is bearish, and shorts are authorized. Price broke through support, attempted only weak pauses, and continued lower. The 1-hour chart shows the final cascade. Lower highs, bearish continuation, and an active short trail stop remain visible while price falls toward the current low. When the daily, 4-hour, and 1-hour charts align like this, the lower timeframe trend is clear. That does not mean chasing an extended move is automatically safe. A market falling this quickly can produce violent counter-trend rallies. It means any bullish idea now needs evidence. A trader needs to see stabilization, a reclaimed level, a structure shift, and renewed authorization rather than assuming price is cheap. Micro gold futures and spot gold are separate markets, and their prices are not identical. But both charts confirm the same underlying story. Both peaked near 5,600. Both failed to reclaim the high. Both developed bearish daily structure. And both accelerated lower during the latest leg. That agreement matters because the sell-off is not an isolated futures contract distortion. The weakness is visible across the broader gold market. There are two competing scenarios. In the bearish continuation scenario, daily, 4-hour, and 1-hour authorization remain short. Weak recoveries fail beneath broken support, and the market continues searching for a lower area where buyers can rebuild structure. In the stabilization scenario, the vertical selling exhausts itself. Price stops making new lows, reclaims an important broken level, and the lower time frame ICC signals begin shifting before the daily chart follows. The monthly chart means a larger bullish structure can eventually reassert itself. But monthly bullish authority is not permission to fight an authorized short across the daily, 4-hour, and 1-hour charts. Gold did not suddenly collapse today. The first warning appeared near the January peak. The failed recovery created a lower high. The daily structure weakened through April and May. Then the June breakdown accelerated an existing bearish move. The macro gold story may still be alive. But right now, the active trend is bearish. Lower time frame shorts are aligned, and any bullish reversal must prove itself. The peak created the warning. The structure confirmed it. And the latest candles revealed the consequence. Subscribe to Black Bear Trading for disciplined multi-timeframe market analysis, and I will see you in the next one.